Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading. Today, market is down about 3.2%. There, on the S&P Nasdaq closed at 4%. Semiconductor got hit 5% negative. Dow 2, Russell 2000 4.2, Transport 3, Banks 2.3. Energy got hit today with the 8% negative performance. Complete. I mean, having a one day for entire sector to be down close to 10%. That's a heavy number there. Biotech down 5%. Healthcare down quite a bit. Home builders held up better along with the utilities. Retail emerging market down about 2-3% there. Bitcoin got hammered 16% negative. Gold silver miners also got hammered. Also here you can see all these guys. And you think normally if the equities are down, you think gold silver miners are, tends to be, inverse relationship, but today it looks like gold silver miners are tanking along with the equities there. Dollar flat, oil down, treasury bond pretty much flat there. VIX popped about 15%. Let's look at the S&P 500 ETF. Spider 65-minute chart here. So this is where we close on Friday. And we gap down here. What I really wanted to talk about is the overall trend of things today. So you can see this is the all-time high. We printed the all-time high right here early January 3rd or so, about 479. And ever since then, start of this year, we've been in this downtrend. You can see that lower highs and lower lows. I think, things got a little bit hectic for the buyers when it seemed like seemingly potentially there's that move and then possibly turning this into some sort of a consolidational type of move. But when the buyers were not able to protect the lows, when it made lower low, what happened was this entire thing is now a consolidation before resuming to the downside, right? So that's kind of what we're dealing with right now because we did cultivate the equal highs for the first time, not lower high, but by the price printing the lower low now. So you can see right here, that's a low, lower low, lower low, lower low. So you got continual lower lows here, right? So with that, we have to say we're still in this midterm downtrend. But what about the long term, you might ask? So what I want to do, I know it's been a while. I used to do this for you guys on the weekend. I'm probably going to bring it back, but I'll kind of quickly touch on this. So what about the primary term trend? What are we dealing with here? So if we look at the long term, really, the long term, we're looking at things since the COVID lows and the recent peak in January, right? So that's kind of what we're looking at here. So about 2 years of worth of price action here. So you can see we did see that very fast V-shaped reversal. And market got up for like a year and a half straight. I mean, we had some corrections along the way, here, and some fluctuation along the way. And nothing like this in this caliber where we're currently seeing about 17 or 18, close to 20% correction. And that's a good, sizable correction we used to see. The problem is that because we pretty much saw this kind of a straight up move in the last year and a half, people have forgotten to deal with overall uptrend, overall bull market, right? If you go back, look at how this market behaved going through 2009 all the way to, 18 or 17, periodically, a couple of years or so, you will see 15 to 20% pretty normally. And so anybody who understands the primary term, the macro, the secular trend of things, understand that in a bull market, seeing 15 to 20% correction is a normal correction. Some people might have called it a healthy correction, especially if you're a long-term investor. So right now, everybody's freaking out. Right now, everybody is complete in chaos and panic because this market saw such a big rush to the upside. It imputed complacency and it spoiled everybody, right? So people are pretty much just like, you just keep buying and you be making money. That's all they know. If all you have, all your experience is just last year and a half without understanding the big scheme of things, how this market used to have its fluctuations. So I have to say, looking at the secular things, the big picture, after this keep in mind, we're at about 220 and we went to almost 500 in year and a half. Market made a huge and the fastest recovery recorded in history ever, right? We've never seen any, this market since this inception where you see 35% correction during COVID, and the market gets right back on making new all-time highs in 5 months, and then keeps going higher and in a record speed and record performance. This has never happened. So seeing a 20% correction after this type of rallies we've seen last year and a half, I would have to say that this is very much needed correction. And people always like to argue things like, we should have called this. You didn't see it, Kay? Yes, I didn't see it. I didn't see it. Nobody saw it. But guess what, though? People say, no. There are people who called it. People who did called it, they missed out this entire rally. They've been calling it probably all the... I'm seeing people call it here. Remember the retest of the lows? Retest of this, coming back down if Trump doesn't win the election. I mean, how many people, this isn't sustainable? All the way through, people been calling the top. What I'm saying is, if you're a long-term investor, and if you rolled this all the way to the top from the lows, then you got to give some back. You have to understand to go through some drawdowns, and what's going to happen is this could potentially provide opportunity. How many of you missed out? How many of you missed out the COVID decline and crying about it, saying that I shoulda, coulda, woulda bought this, but I was too scared and I missed out this entire thing? How many of you, right? Now, how many of you thought when this thing was going up, you guys are all saying, oh my God, next time, man, next time we see some nice correction, I'm going to buy that. Now that we actually see a correction, what's everybody doing? Everybody's shaking their boots. Yes? So we're in this downtrend in the midterm, not in the long term. In the long term, I have to say, we're still in an uptrend, right? We don't know where the bottom is, but overall, we're still in a primary long-term uptrend. Could this turn, somebody asked you, could this be maybe something could turn into a down? It could become that. But as far as overall, real substance that can tell us that this is start of a bear market or a recession, we don't have enough evidence of this. We have to give benefit of doubt. Keep in mind, there are people who are calling that the bear market is going to start in 2012, 2014, 2016, 2017, 18. What about 2020? The Great Depression 2.0, right? Everybody's been wrong for 10 years or more. And now the same people are calling that this is it, after missing out 10 years of run. So let's check out that oscillator. See if we can extract any more information. So the oscillator is pretty much useless at this point. You can see it's because we're in this market where we're in this downtrend. We get some pops here and there. We've seen some bullish divergence here and there. And in certain environments, that these signals is not going to play out. So what we have to go by really is not so much an oscillator, because when the market is in a bull market, that oscillators are going to really play not bull market. I mean, when the market is in this bull rally mode, which if you've been following me, because remember, I've started this daily update videos right here during COVID lows. And you know that oscillator, if you've been following my oscillator, you were able to ride this all the way up, right? And that's kind of how I was able to ride this all the way up, that oscillator kind of guiding us. But now that we're in this kind of a midterm downtrend, not long-term downtrend, midterm downtrend, it's starting to get, you know what I'm saying? The 60, I think more daily chart oscillator will work better. The 65-minute chart oscillator has been kind of useless at this point. So what we have to go by is that until we see the oscillator, either this thing goes, if bulls want to see anything, we want to see that oscillator going back up, hitting the top of his band. But that's not going to be only enough. We can see all these moving averages are declining now. So until we see, cultivation of higher lows and higher highs in the price action, we have to give benefit of the doubt to the sellers in the short term, micro term, short term, and the midterm. So midterm is looking more bearish now because of a lower low. So if buyers want to see a change, we must first see that the cultivation of higher lows. You can see even when we did see that move, and I was preaching about that bulls need to see that higher low. Bulls need to see that higher low. Bulls need to see that higher low. There was no higher low. We just kept tanking and made a lower low. So that's kind of what bulls need to see. If you've been desperately seeking this market to reverse back up, it's not gonna happen overnight. It's gonna take weeks at this point. You're not gonna see, unless there's gonna be some crazy V-shaped reversal, which could happen. This market is known to do that since 2018 or so, some crazy V-shaped reversal. Unless we see some crazy V-shaped reversal, it's gonna take weeks, if not months, before that whole entire trend can shift back to bullish. Until we see that, the benefit of the Dow goes. The sellers are gonna come back for you. We'll reassess the situation. Enjoy your evening and go trading tomorrow.